Right, morning folks. Big day yesterday on the 10th. Today's the 11th of November. Yesterday we had the CPI number. As you know, for months I've been talking about the CPI becoming an increasingly important number, probably will become more important than the US non-farm payroll number, which until now has been the most important number for decades. But finally it's all coming into play as I expected. Last week I thought we would break above this is the dollar index, sorry, daily chart above here. On the top here, I thought that the dollar index would start to break above the previous high for October, high in October, the high for 2021. I was really surprised to see the market pull back on that strong non-farm payroll number and dip. And then, of course, the CPI number came out and we absolutely rocketed. And again, it was an odd reaction. I thought when I saw that number, right, that's it. Dollar's going to take off. Bonds are going to collapse. I thought the stock markets would probably ease just because we had higher interest rates. But it didn't happen. And gold went through the roof, which confused me because last week I talked about how gold bulls are not benefiting from higher inflation. Gold is always touted as this great inflation hedge and gold should go through the roof when inflation goes up. And it's something that I don't really believe in because when interest rates go up, whether that be through bonds or short-term interest rates being pushed up by central banks, then of course money would usually flood into an asset that is providing a yield, just as stocks have been doing. You know, money's been flying into stocks because bonds have been returning nothing. In some cases, even negative interest rates for bonds. But if that is turning because inflation is going up, and bond yields have to follow that, then of course there is going to be some returns in those assets. And therefore, why would you bother holding gold when you can put your money into something that might be yielding 1 or 2%? Maybe not right now, but eventually. Anyway, that's always been my theory, and it seems like it's coming to pass now. Right, the dollar's through the roof. Interesting down here, this is the weekly chart. Right, this was the only thing that could have held the dollar back, the 200-week moving average, and we're through that now, well through that. I'm just going to have a look at the monthly chart. I don't think there'll be anything relevant. No, well, we're through, even on the monthly chart. So 96.00 looks like we're going to rally 100 pips pretty quick in the dollar index. I hope you've managed to jump into a long yesterday somehow in the dollar, whether that be through selling the euro US. Actually, I don't need to show you on this chart now. Hold on 1 second. So shorts were going really well. We sold it up around the 116.00 area. We hit the downside targets. I said that maybe a break this wouldn't hold for too long. It didn't. Well, it was triggered by the CPI number anyway. I mean, I couldn't have possibly known that was going to happen. But anyway, we were in a bit of a short-term bear trend. We were trading below the moving averages. So if it was going to break in either direction, it was going to be to the downside, and it was the CPI number that triggered it. Now, I did say that a break below, what did I say? Was it 114.90 would be the sell signal? So now we do have that sell signal. I can take these fibs off now because they are old, but I just wanted to leave them on to show you the break below that low was the trigger. And, well, you'll have read today's report, so you'll know what the downside targets are. But we are now breaking below the 50% fib. So, we really do have some significant potential to the downside for the euro versus the US dollar. The euro, as you may remember, I've said this many times, is the main component or the biggest component of the dollar index. So if it's going to happen in the dollar, it's going to happen mostly in the euro versus the US dollar. And of course, we have broken previous lows with the dollar strength. So I'm hoping that maybe some of you are at least short the euro versus the US dollar. Cable has been trickier for sure, but should also sink as the dollar rallies. We are in this very odd pattern here, very volatile pattern, very difficult to decipher, I've got to admit. I mean, I could have argued that was a double top pattern, but it was really struggling to play it out. You see that double top there, but this isn't what you really expect, this bouncing around after a double top pattern. Anyway, even around the 23.6% fib, I mean, that was really tough. Broke it, rallied back. Very difficult market to trade. As you know, I've been struggling with cable for a while, but I believe that now that we've broken to the downside again, I'm hoping we won't get this crazy bouncy thing going on here. I'm hoping now that the dollar has some more direction, we'll actually go down more in a straight line, make it easier for shorts, but who knows. Okay, Canadian dollar. that was a struggle. There were some decent trades there, but that was a real struggle from sort of mid-October to the first week of November. Anyway, now at last the markets have got some direction. So I think this is a really good time for us to be trading in the markets. We're going to see some decent moves. So Canadian dollar now has broken up through the 38.2% fib resistance. So that indicates further gains. This should now be the support level down around 125.10. So as long as you hold above 125.10, then we should keep going, and I think we probably will. Dollar yen, obviously that break below that 113.40, 113.30 was a sell for me, but of course we did head lower. We didn't quite. I think we missed my target by about 10 pips, and then of course the CPI number took over yesterday, and the dollar went through the roof. So obviously the yen was going to suffer on that. What can I do? I can put a trend line on here just to give you an indication of where the next break point would be. Yeah, I think that's about right. So up through 114, 20, 30 should be the next buy signal. I think it will happen because I just think the dollar's going to keep going. And I think we've been trading mostly this bear trend anyway after the sort of double top. And it's been working quite well. The fib levels have been working really well, as I said earlier in the week, for scalpers. But now we seem to be building momentum to the downside, of course. Once we broke that 500 period moving average on the 4-hour chart, let me just have a quick look at the daily chart, see if there's anything on there. I think I can take these fibs off now and just have a look. So we're breaking below all the moving averages as well. There's a little trend line which we should just pay attention to here. There we go. That's down at around 72.40, 72.30. I could possibly argue that is a very large bear flag. Could I? Maybe I could. Anyway, for me, it does look like further moves to the downside are likely. Fib retracements, let's bung them on, give ourselves some targets. There we go. Yeah, I mean, this is confusing. A little, not dissimilar to the bouncing around we saw in cable. Looking purely at that, you would be very confused, to be fair. But I'm going to have a negative bias on this. Let me see where that trend line takes us. Oops, didn't mean to do that. Well, anyway, you can see that the trend line will cover the resistance level. Let me just try and chuck that on now. There we go. And come on, there we go. Okay, a little bit above. But anyway, we are seeing something of a downtrend, and I'm just going to stick with that downtrend, even though it's quite erratic. Right, gold broke through the previous high around the mid 1830 area. Once we did that, we got our buy signal. Okay, all fair enough. And I really thought that this could go well. It's hit the trend line. Look, the trend line goes back to September 2020, so it's whatever 13, 14 months old. That's a big trend line, and that's exactly why we've halted there. So this is going to be absolutely key. Now, do bond yields keep climbing, and does the dollar keep climbing, and then gold turns around from here, and all those guys who are sitting on gold as an inflation hedge then get destroyed, really, because they think this is their moment of glory. Now, I've got a feeling that this will turn around, actually. Let's put some fibs on here. It certainly is the resistance that matters, put it that way. Now, if we do dip, we've got support down at 1835, 1833, 1832, let's say. I've put that on today's report, of course, and it's very clear why. I'm actually going to take this trend line off and draw it like this. So we could sink, if you're feeling brave, and if you think that I might be right, and you are shorting up here around sort of 1865, 1870, then it would be lovely to see a 30-point drop to here for some profit taking, and then this will be the key support level. If that holds, then we can have another go at this trend line, and then we can be talking about maybe a break next time. So if we were to dip, bounce off there, and then bang, retest, I wonder if this time, having hit that tested that so many times, we could then break up. Of course, we break down below 1830, and it's pretty much goodbye gold. If gold can't hold that level, then with such a high inflation environment, then I think it's all over for the gold bulls. So it's quite an interesting scenario. Silver has certainly recovered and it's beaten the highs from September and October, but again, not really roaring away as a precious metal reacting to a high inflation environment. So again, you would be pretty disappointed, wouldn't you? We'll see what happens around the 200, the 500-day moving average at around 25, 35, 40. But yeah, as I say, not really the strongest market that you would hope for. If you're looking at crypto, Bitcoin hit a new all-time high, but even Bitcoin was battered by that. Really, I think it was a CPI number that caused this significant drop-off, just as gold reversed when finally people woke up and saw bond yields rising. So we've got this huge bearish engulfing candle, easily took out the previous day's price action, almost took out 2 days of price action. We're seeing something of a recovery. We do have some resistance around the 65,000, 65,500 area. And then we've, well, anyway, you've got it all on the report. But I don't know. I'm not convinced that this is going to keep going higher now. This is a big bearish engulfing candle. It'll be interesting to see what happens on the weekly chart. Will that sink back? I mean, if we start sinking below 59,000, this is going to be really very, very bad indeed for Bitcoin. Now, if we were to close the week below 59,000, we would have a pretty big bearish engulfing candle on the weekly chart. So suddenly fortunes may have reversed a little bit for crypto. We'll see what's happens on that over the weekend. That will be quite crucial. DAX is in yet another one of its sideways consolidation phases. I don't see a sell signal. I think it can keep going, but wow, it does love a consolidation phase, doesn't it? Pretty boring, the European stock markets. The US markets are a little bit more exciting. We dipped to a support level yesterday in the S&P, and we seem to be recovering from that now. Anyway, the levels are on the chart. This would be a good level down here. Where is that? Let me get my crosshairs. Yeah, and I've got that level on my report today anyway, so you can see why I have that at, I think it was 46.15, 46.05. Whether we get them down there, I don't know. Now, stock markets, I would assume, would get hit if interest rates take off, because of course, if you can have your money safely tucked away in a guaranteed interest rate, why would you have it put away in stock markets, which are by any measure pretty high? But that is yet to happen. At the moment, this is just probably a bull flag where we dip and then break up again. We'll have to see what happens when we retest the high. But for right now, I would not be. And I get a lot of people contacting me. Why are the stock markets so high? Why are they rallying again? It seems like retail traders love selling stock markets because they just think, how can it keep going? We must have a crash. The market must turn around and dip, but it just doesn't. And as you know, that isn't my philosophy at all. I'm a trend follower. So if it's going up, I'll keep buying on support. I don't think about the fundamentals and the valuations and everything else. All I know is that when we're in a bull trend, you just stick with it until you get a reversal pattern or something that tells you that the market could turn around and collapse. And there is just nothing on these charts that tells me that. No bearish engulfing candle for the S&P. So as far as I'm concerned right now, this is just a small correction in a bull trend. Okay, I hope that's useful. Do fire questions at me, please, if I can help you, and we'll chat again tomorrow morning.